For the first time since our office was given the forecasting responsibilities for recreational marijuana, we've really made a fundamental shift to the underlying forecast. You can see here, red is actual monthly tax collections as reported by the Department of Revenue. The light blue line is what we put together in the spring of 2017. And it's tracked fairly well. Sales have continued to outpace expectations to the tune of $7, $8, $9 million, 7% above expectations. And given all of the underlying trends and shifts we're seeing in the marijuana market that's beneath the surface, we're really encouraged by the collection patterns, the sales patterns, our advisors to raise the outlook. One of the biggest things that's going on here is while we do have overproduction of marijuana in the state of Oregon, it has really increased competition within the marketplace, and prices have plunged by more than 50%. Even as prices have fallen by 50%, and this is something that puts downward pressure on tax collections, right? This is something we don't have a lot of experience within Oregon, is a sales tax, but we levy it on the base of the price. So if the price is falling, that means you get less tax revenue for every, in this case, every ounce of marijuana or every joint or every edible or whatever the case may be. We're getting less tax revenue for every volume of sales that is taking place. And so as the prices have come down, we've seen usage rates increase. Oregon's usage rates of marijuana have increased substantially in the last few years. We're going to get another data point here in February, I believe. We'll get another state level number. The national number just came out, and nationwide usage went up last year at the nationwide level. And I expect to see it in Oregon too, but we'll have to wait a couple more months. So usage is up, and black market and medical market conversions are up as well, based on the best estimates. Of course, we don't have a true understanding of how much black market or even medical market production is out there, but if you look at the distribution of the population, how much people use of marijuana overall, you can get some rough estimates of the total size of the marijuana industry in Oregon, or at least the consumption base in Oregon, and then you look at how much is occurring in the recreational market, and private forecasters, private industry folks are estimating that we're now about half of the marijuana market in Oregon is in the recreational market, in the legalized recreational market, 25% black market, 25% medical market, right? So we've gone from 0% recreational to 50% recreational. At the same time, prices have plunged and usage rates have increased. And all of these things are leading our advisors, and given the underlying sales growth we're seeing reported by OLCC, to increase the forecast to the tune of roughly $20 million in the 1921 biennium. You can see there the dark blue line above the light blue line over the next couple of years. And I think here the risks are even tilted toward the upside, depending upon that usage number and continued market transformation and conversion into the legal recreational market. But so far, a lot of the trends we're seeing are encouraging from a policy perspective.